The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, for another adventure in stock market trading out here. And we've got a market that's up a point now on the S&P cash after being down roughly 20 points from here. It's come back up. A lot of volume, which would suggest that this 1926 is going to get retested sooner rather than later. And, of course, trotting out old Buffett today to say, hey, it doesn't really matter. Just buy. I'm going to be buying. I'm going to buy. Did I say I was going to buy? I'm buying. Hadn't said anything other than that. And, of course, kind of nice that he's in a position where he doesn't have any Carl Icahns that can come up and beat on him. He pretty much calls the show. And at that point, what do? You say, I'm going to buy a company, and it's probably not going to be profitable for 5 or 10 years, and I'll probably sell out of it in 5 or 10 years, and then that'll be it. And to this point, what can you say? So he's been successful. He's been able to do it. But I've seen more than one time when he's said that he was buying when he was selling. And he may be buying this car dealer in the Midwest, who I just happen to know and who I've met right out of high school. A friend of mine went to work in the service bay of Van Tuyl, and it's spelled a little bit different, Tuyl, but pronounced Van Tuyl. Chevrolet dealership in Overland Park, Kansas somewhere. And interestingly enough, my friend went there, and I was standing at the counter when the guy came up and started saying something, and he introduced himself, tried to sell me a car. Of course, I was 18. I didn't have 2 nickels to rub together, but I said, well, I've got this nice Plymouth Cuda. I don't think I'm going to be trading in for anything else right at the moment. But met him for a few minutes, bumped into him several times as my friend worked there. And I thought I was emailing my friend this morning because he used to have lots of people come in and say, I'm a good friend with Larry Van Tuyl. And, of course, not Tile as it's pronounced, but a lot of people, because the way it was written, would say Van Tuyl. And so we always made fun of those people and others by calling them Larry Van Tuyl. Not very far off from a meaning it would have many years later, because he was a tool. But he was, I guess his dad had basically built up the business, and he was a young, I'm going to say 23-year-old kid at the time who thought that he was 45, as they like to say in Top Gun, writing checks his body can't cash it. Anyway, he was very brash, and like any other 23-year-old kid that would be given a 10-acre dealership at the age of 23. But I guess he's finally made it and cashed out with old Mr. Buffett here today. But most of those places Buffett keeps. But there would be a reason why old Buffett's getting in this, and while Van Tuyl, I'll call him Van Tuyl, is selling out all his dealerships that he's had over the, 23 in 1987. So it probably makes him, about 58, 59, something like that now. So anyways, we watch him sell out. What's the issue? And my guess, it's going to be cash. that old Van Tool said it was time to get somebody with some deep pockets to back me. We've gone through one big river over the last 5 years, and if we're going to succeed long term, I'm going to need somebody that can go and get cash when necessary, not have to depend on others for cash. But just a few days after finding out that we were continuing to have issues with long mortgage, or not mortgage loans, but large car loans with 7 and 8 years and long-term leases. Kind of interesting to see Buffett jump in. My thought is that maybe this is a little bit distressed, maybe. And this guy wants to, of course, the car dealer wants to get out at the top, Larry Van Tool. Of course, I'm assuming he still owns it. For all I know, he sold out and sold to somebody else still using the Van Tool name. But interestingly enough, I've known them for a while. Top Gum. Anyway, up almost 2 points, 2.66 billion shares on the New York Consolidated Tape says that this is a high volume low that will get retested soon enough. And, of course, we've got numbers in the morning, but 22 points up off the low. Looks like we've got a lot of people wanting to step in at these levels. And it looks like now, if you go back through the last few moves, as soon as the VIX hit 18, the floodgates opened. My theory on this, if you've been listening to the show, is that there is a value at risk model out here, and they cannot allow stocks to really push that VIX up much past 18 or hit a endless loop cycle of selling, i.e. They have about the largest margin that they can carry. And as long as the VIX doesn't get high, they can do that. But one of the inputs for the model is the VIX. If it would get up and stay over 18 for any length of time, they would have to cut the margin, which would mean that they have to sell stocks, which would mean the VIX would go higher, which means that they would have to sell more stocks. This is the sand foundation that I think this market is built on. And we've already heard rumors of at least a couple of hedge funds probably buying it on this huge run-up in Fannie Mae and Freddie Mac over the last couple of days. This may just be the last of that out, but still looking for 1905, and I think we could see it by Wednesday of next week. But we're going to have to see how today finishes. Now, as far as I can tell, watching the volume as of today, that we're going right back to the patterns that we had before, which is people will buy every dip right until the point that it gets to break even, and then no one will buy it. And that's pretty much what I'm seeing so far. We'll have to see if any more volume comes in at the end of the day, or we have a very flat, light volume market for jobs numbers in the morning. But I digress. You can give me a call at 877-927-6648. That's 877-926-6648. You can email me at path@tfnn.com, which I guess someone has. We're going to go take a look at this. Any insight into the rally? What's your take on what happened here today? My take is that crude went down to the bottom, it bounced, and everybody started buying a lot of these distressed energy names thinking that crude had made a bottom. And with the S&P being about 30% of the S&P, energy stocks, that this little bounce out of here that we've had 3 or 4 already just is the market gaining strength. To me, it looks like we're going to see both the equity markets and the energy markets break through 87. And it looks to me like we're going to wake up one morning and probably have a huge gap down in the markets. That's what looks like it to me. And, of course, as we see these markets wind back up, I suspect we're going to see it very tough to be short this market, but you're just going to have to grin and bear it. And if you want to remain short, but no. Do I think that there's any bottom in? No. I didn't see anybody on CNBC or Bloomberg start yelling and screaming and saying it was time to short the market. I didn't see anybody say anything else other than buy. I think that's what they did today. Every time that they've bought now in the last 10 days, they've got their teeth kicked in. So we'll see in the next couple of days. But I don't see anything out here that has changed the thesis that we've seen a high in the indexes and that we're going to slowly move sideways into the end of the year. We're probably going to see some hiccups in that. But I suspect that what we're probably going to do is gap down significantly, maybe 20, 30 points down. And that's probably going to set the B point for an ABC down in the greater markets. It's going to be kind of flat probably the last part of the year. But I see enough stocks out here failing that it is hard for me to believe, other than the indexes up here, that there's any juice whatsoever. And even in these indexes, we're up 2 points on the S&P cash, no volume, at least not since the beginning of the show. So we'll continue along that way. Of course, on this day in 1864, the Union Cavalry column strikes Saltville in southwestern Virginia. Wasn't a lot of warring going on during the uncivil war, but there was a huge need for salt, not available except up many years later, and train tracks up to Minnesota and some of the other salt mines up north around the Great Salt Lakes. At that time, though, pretty tough to move that salt, and no railroads back up in there at that time. So they needed a big source of salt for preservation for all the beef coming out of Chicago and coming in to feed all those warriors. And, of course, the war was starting to already wind down. But today in 1864, the Battle of Saltville, just reminding you that things can always get worse in the United States. If you think things are bad now, imagine 1863 or 1864 in the depths of the uncivil war. Just a thought. Cree stock plummeted today. It would be no surprise to anybody that read the Tech Insider. I've been chronicling why Cree would be going down for probably the better part of a year. If you would go back, I think last fall, there was a company called Plessey in England. They came out with a way to make LED lighting without using sapphire. And basically, I went through the whole thesis on why Cree would have problems, but there were twofold. One, Plessey was selling the technology to use sapphire or use silicon as a way of lowering the cost of making LEDs. The problem is that when you're making LEDs, they have to be made at such a high temperature that you have to use sapphire as a substrate. And I think at the time the boules were running about $600 for a sapphire boule and about $30 for a silicon one. And since they've been able to move out of that and sell that technology, Plessey, the writing was on the wall for cheaper LEDs. We'll talk more about this one.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, just going to say, wrap up with Cree and then get to a few other stories. I'm getting far too many people asking me about shorting GoPro and Tesla, which probably means that you're a little early, but I was going to say that already. Anyway, if you read the Tech Insider, you saw my thesis on this. One, the price is going to come down on these, and of course, as the price comes down, even if they could keep the same margin, they would have a huge problem with keeping the same kind of revenues. A lot of other companies coming along with Plessey's technology to use silicon instead of sapphire. And the other thing is just how active we've seen General Electric and some of these other companies that had fallen behind in the LED market get in, and even if they couldn't make any money, they were going to make sure that Cree didn't make any either. They didn't want to let the company get away. As Larry Ellison from Oracle is renowned to say, it is not so much that we win as others lose. And my guess is that General Electric tried to get out of making light bulbs here in the United States, so they ginned up this whole story and got them basically to be illegalized here in the United States so they could move manufacturing to Mexico. And once they did that, they found Cree had the Cree camel had gotten its nose under the light bulb tent, and let me put it this way. Creed made a deal with Home Depot and ticked off Walmart. Walmart got together with General Electric. General Electric didn't like it. Walmart didn't like it. And Creed found some very significant problems. Also, these bulbs last about 20,000 hours. And if I can go to IKEA and buy their bulb, which I think uses that Plessy technology because it's so cheap, I can buy them for $4. And it's going to outlast, 15 of the regular bulbs. It's also going to burn about 4 or 6 watts, depending on which bulb I buy from them. It's going to use less electricity. It's a no-brainer. Why would I pay $12 to $15 for the Cree bulb? You can make an argument that it's better, but it puts out more heat now, and also has some other technical issues. Are the other bulbs as good? The answer is no. But is it worth paying for twice as much for another 5,000 hours of light from these bulbs? The answer is no, especially when most of the time my lights are out anyway. Now, I did put several of these light bulbs out around my house for lighting. I've got 2 spotlights and 3 regular bulbs for nighttime lighting. And they've all worked through the heat of the summer, which is a big test for LED bulbs because they don't like heat. But so far, so good. And again, I've got $4 invested. What a regular bulb would be, $1.12, and suck 10 times the amount of energy. So I figured my break even on these things is about 9 months. So not a bad deal. Easy to go to LED lighting as such. Other things going out here, of course, GoPro dropped the Baby Ruth in the punch bowl today. They're not going to be very happy with Mr. Woodman anymore on Wall Street. He basically circumvented all the lockups, and this is why it's so tough to have a stock with such thin shares trading. This thing went to the moon. We talked about the other stock yesterday. But these sliver deals are a great way to get the price up. And guess what? When the shares become available for unlock up on December 23rd, what's going to happen? Well, everybody's going to remember the stock, at one time was at $93 or whatever, 95. And maybe $45 seems like such a deal. That is part of what Wall Street wants you to think. It is about marketing stock, and of course they really can't dump out a lot. If they dumped out the 75% or 80% that wasn't available, actually I think it was 20% was available on this IPO of all the shares that would be printed that day as it went public, that continues to be an issue. Well, of course, what they did was figure a way to get around that by giving 5.8 million Class A shares to their own charitable trust organization, but they control it. And the question is, will this charitable organization already start selling? Is Woodman trying to get out in front of a stock price coming back? Well, the problem would be nice if it just stopped there. Unfortunately, someone bought 100,000, another 60,000 puts just a day or two before. I wonder who bought those. J.P. Morgan knew. You think that there was a little insider trading going on? Be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're flat on the S&P cash, 2.8 billion shares. So we've had more volume to the downside, and I suspect this is starting to act a great deal, just as the 2000 highs did in the NASDAQ. I'm starting to get my spidey senses starting to act up a bit, and just the action out here. The rabid bulls bought every pullback, and there were massive counter moves to the huge moves down, all the way down in 2000 in most of these stocks. And just because the stock came down didn't mean that anybody was any more afraid of it. A lot of people just rode them down. A lot of intraday traders kept action in it to keep hope alive, as they say in the race business. Keep hope alive. Anyway, it is interesting to see just how much volume almost always tails off on these rallies when they get back up to these highs, and pretty much what we've seen for a month now. And that is no volume once they buy this thing back to par on the day, and then a few days later we keep moving down. Anyway, we're talking about GoPro, and it looks like someone knew a great deal all the way through yesterday, because we saw 100,000, 100,000, 60,000 puts bought on GoPro for this Friday. And that was pretty much an average of about 10,000 every day in September. So you think someone didn't know something? They knew it, and my guess is that J.P. Morgan had their greedy little hands all over it, and maybe it's available insider trading, but I don't know. To me, I think it certainly violates the spirit of the law, if not actually the letter of the law. The question is whether anybody would go after them on this, but made a ton of cash. Someone did anyway, whoever bought them. But we'll find out if the SEC even tells them. But they have a fiduciary responsibility as the lead on that. And if they profited from it and you end up eating it on the shares, I guess we're probably going to see some lawsuits out of this deal in GoPro. Installed Windows 10 yesterday, at least the technical preview. If you go to and just search in Google, technical preview Windows 10, you can download it and install it on your machine if you have an extra hard drive, or you can back up your system and play with it for a while. I'll be doing a review on it on the Tech Insider tomorrow night. But it is very interesting. I think Microsoft has some decent ideas, even if the Wall Street tech press is so enamored with Apple that they can't think of anything else. Of course, all you have to do is look at the stock price of Microsoft and see that it's done very well over the last year. Of course, Argentina's index was down about 7%, taking an 8% beating yesterday, and that's after the only last fiscally responsible individual left power in Argentina. We now have the true and dyed-in-the-wool socialists who have run out of everybody else's money, but still unwilling to cash up and pay the fiddler here in the United States to people that loaned them money before. It looks like they're getting into a vexatious refusal to pay, if you know that legal term. And it is going to be interesting. Maybe we'll see 20 or 30 years of Argentina going to the bottom of the third world countries out here with the inability to get anything done. And doesn't even look like they're going or trying to do anything. Now, maybe they'll get something done before the end of the year, but by then, will it matter? Or will they just be a third world stinkhole, broke and impoverished with no cash and no economy? But keep an eye on it. Now, we had a lot of people asking me both from email and in the den about Tesla. We still have about 3.5 days to cover on Tesla for the short interest on the last reporting. But, of course, that was over 15 days ago. So we don't know what happened. It looked to me like a lot more people were piling on short. And, of course, we saw a nice little pop out here in Tesla today because of a tweet from Elon Musk after the close last night talking about a October 9th premiere date for a new vehicle. And something else, a la Steve Jobs, one more thing, it's going to be something else, I guess, for Mr. Musk. My guess is if you wanted to short this thing, what you're going to be doing is looking at that October 9th for some kind of spike. But you want probably about a 10 to 15 point day, interday, not this one, where this thing rolls up maybe around October 9th. You want to see a very, very light movement on a lot of volume. I have not seen it yet, and that would set up maybe an opportunity to short this thing. As I said, I've got a bunch of shorts out here. I've got one that I'm short at 130. It went to 113 today. Oh, actually, over the last week. It's been going down rather significantly, but it's bounced $1 to 114. That's the kind of action you want in your shorts, not ones like Tesla that take your head off with $11, $12, $15 moves going back up and down. And this kind of move tells me that there's enough juice in this to still run the shorts one more time. You need that almost as vapor-like volume on these high volume, short interest stocks to finally say that the shorts have given up, and I haven't seen it. Did it have a nice move down? The answer is yes. Have you missed the big move? I don't think so in Tesla. This may be one of these out here that you really want a very huge sign that distribution is over. That stock that I shorted at 130 that went to 113 today, actually, 113 and change, is one that I'd been waiting for 6 to 9 months. The rest of the sector had already blown up. It was the last stock in that sector that had not. And I think the thing has a lot more to go out here. But I would just give some patience. I would rather be short this thing at 275 or 280 on one more than go ahead and miss it. I would rather miss it than not wait for a bounce back up here. But you're going to see some ridiculously light volume if history is any guide on these ultra high short stocks. And my guess is you are going to get a 275, 280 on it. It may even take to the end of this year. But I would look at a lot of these high short interest stocks are going to go into Christmas. And you're going to see these shorts like I talked about in August, where it just slowly grinds these guys and the index is up, and then we're going to have the big break. There's just still a few of these stocks like Netflix and Tesla that haven't given me anything yet out there, and somebody else asked about GoPro. I think GoPro, you have to have a 50% margin up front that you will lose to short it. I don't know what it is today, but in the last few days, because I wanted to short it the other day and found out there were no shorts available. You could go and pay a 50% penalty to borrow the shares, but only an insane man would do that. I think that's why we saw such huge action in the options from probably the only people that were on the inside of that deal, most likely, of course, J.P. Morgan. We'll see if any lawsuits come out of that, because if I was a shareholder in standing, I am not, I'd be calling up my personal injury stock attorney right now and saying, hey, this stinks to high heaven, and they broke their fiduciary responsibility. And I don't know what the exact law in there is, but boy, like I said, they certainly broke the spirit, if not the letter of the law on that. It's going to take somebody that can buy 250,000 puts on a stock like GoPro to do it. And I think you're going to still see a few of those things. But anyway, look for Tesla after the announcement. I think it's a fool's errand, just like trying to short Apple into their press release. They're going to at least buy another 7 days of fairly decent support. I would have liked to seen some other stocks really see some damage today too. And those high short interest, like the IBB, may not have the short interest in it itself, but certainly the stocks below it that are in it do, and makes me think that it's going to be very tough to see IBB crack before the beginning of the year. Again, as we get into about the 15th of December, we're going to see shorts start to cover. And I think much like we saw in 2000, a lot of these high interest, short interest stocks are going to be targets for a massive move down, maybe a day or two after the beginning of the year. So I would avoid all these. If you see them on Bloomberg or CNBC every fifth tick, you're probably looking at the wrong stocks. All the stocks that are cratering out here are not Apple, and they are not Tesla, and they are not GoPro. GoPro's up, taking half of it back now, down just to 580 now. But all these things are going to be opening up. Now, GoPro, a really nice opportunity is going to be that option that lockup on December 23rd. I don't think you're going to see any action, but boy, I think when you come back after the new year, I think a lot of people might start dipping their toes in the water and start selling GoPro. But it's going to be very tough to get a lot of these stocks moving down before the beginning of the year. Find stocks that have already failed and are doing their ABC downs. The ones that are hanging up here, going to be very tough for these for you to kick these guys in the teeth enough to get them out before the end of the year. You want to find stocks that have shown significant weakness already. Let's see, what else do we have out here? It is a mad market. Let's go look at some of these stocks that we did talk about. Again, Tesla, probably I would love to see this thing come back up to the top of this high volume down day on lighter volume. That was the, August 19th? No, August 15th, excuse me. 16.5 million shares that day. What do we have today? 6.7. I think this thing's probably going to drift back up in there. And boy, I would love 270, 275 before I would consider shorting this again. And again, you got, 7 days? Would it be a big deal to see this thing pop $10? But I have a feeling that you knew that already if you were short Tesla and saw a huge 20, 25, 30-point move down in the S&Ps only to see this thing bounce $10. That is the way that stocks that are highly manipulated and stocks with huge operators in them. And if you think for a moment there isn't a big operator behind Tesla making sure that all these shares go out at very high prices, think again, because I'm sure the phone calls there, your stock's been shorted very heavily over the last 3 days. Time for a very nice press release. And the cooperation between the boardroom and the street has probably never been so close out here. And it is not a fair fight until these stocks give every indication in the world that they are ready to majorly fail. Now, some of these stocks have been making some bottoms. I am not one of the guys that think that we've got a bottom in, although we're up, 4 points on the S&P cash now at 1950. Of course, we've got numbers coming out at the earnings. A lot of these stocks did hit lows on lighter volume. One of them is Zynga, but again, not a lot of action in these stocks that are making lows out here. So I'm going to be more than willing to sit on the sidelines for a little while out here, probably after the numbers in the morning. We'll have to see how these things turn out. But high volume lows, closing below them, staying below them, not new. Another one are these China stocks. Now, Yoku probably a little bit better looking at here. And that is this thing may close back above the $17.77 low. And that day was May 23rd's low, 12 million shares. So some of these have based out, and this does not look all that bad. I would have liked the last big move out here not to have this big volume day down from August 20th, which it did have, and that is problematic, which means this thing may go sideways for a little bit longer, even if the markets do reverse and head back up. Some of these other ones out here starting to look like at least temporary lows out here. You can give me a call at 877-927-6648, 877-927-6648, and we'll look at Weatherford when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And closing in on 3 billion shares today, so we will have a low out here that will need to be tested at 1926 on a high volume, and we're up 5 points on the S&P cash. Of course, my guess is that we see the lows in the D point probably next Wednesday. Maybe today is the B to C point, and that's everything that you're going to get. But volume has been rather light since we crossed the flat on the day mark. But I have a feeling we'll have to see how this comes out. But hard for me to see how something turns around. And my thesis is that, of course, with the dollar index out here, it's pulling back a little bit today. Everybody thinks that this is over, but my guess is that once the dollar gets moving, it's hard to stop it. And we broke through those levels. So now we know one thing, and that is that unless there's a significant move in the next few days, the next quarter of earnings is going to be severely impacted by exchange rates. And I don't think there's any way you get around that. The dollar would have to probably collapse back down to 81 on the dollar index to get me to change my idea on that. So I think we've got a pretty good thesis that the top is in. The question is now, how do we trade this between now and the end of the year? My thoughts are that a lot of mid caps and small caps are going to get crushed before the end of the year. These big caps are probably going to hold up better, but still head down. We're going to see the real destruction in big caps after the first of the year. And that's at least what I see at the moment. Of course, in the next 2 hours, we've got the Tom O'Brien show. And then we've got, of course, Andy Heck, who loves my Hawaiian shirts. I guess he doesn't know that I grew up in Hawaii. So he would make fun of my Hawaiian shirts. And that's it. Oh, he's telling me that somebody on CNBC is saying gold is going to $660. Well, we'll see. I don't see that right at the moment, but weirder things have happened. Anyway, we were talking about CRE. Might as well look at the chart out here. This is getting back in here with a volume today. And what you want to make sure is this thing comes in with lighter than, what is that, 3 point? Is that right? Yeah. Looks to me like, 14.2 million shares. We got 10 million so far today. But, boy, I tell you what, a lot of these have gone to extraordinary highs to fail. And I think we started shorting this one in the Tech Insider around that January 22nd high and did it a few times back in here as it came back down. Other things that we're watching at here that I wanted to keep an eye on and see how they were doing today. Some of these stocks that had big runs are coming back into these gaps with lighter volumes. So I have to be and stay frosty out here. But I don't think we've made the lows overall. What I look at here is this big gap up that started the big run for Alcatel-Lucent. Of course, they got a giant contract right there from China to wire up the 40 biggest cities in China and sell their routers to them. And then, of course, once that business was done, I think probably somewhat problematic to repeat a China thing. But my guess is that they'll be continuing on. But certainly on the chart business, not looking bad out here. Only 11 million shares so far today. Anyway, hang on for Andy Heck. And, of course, the next 2 hours with Tom O'Brien. Sell when you can, not when you have to. See you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.